Alrighty, hi friends, Frankie here. Okay, so today we continue our conversation about DeFi, this time in the context of transparency and why it's important to have transparency when learning about DeFi projects. It's important because there's always going to be security risks, right? There could be economic risks or regulatory risks that with a little more awareness and understanding could help prevent you from being rug pulled and losing all of your money. And when I think about it, if a team launching a quote unquote next big DeFi project is incapable of communicating the risk themselves, it's likely that they don't understand what risks they are up against, aka this is a huge disaster, right? So let's get into it. First off, say hello to our host, Patrick Stanley of Freehold and Muneeb Ali of Hiro.
Everyone, awesome to have Chris here. I think Chris and I will get into the story of how we shared working space in New York City.
Yeah, I just shared a little bit of that before you came on. It's so funny how small world it is. Because I was saying, like, that was like 4 or 5 years ago, and I wasn't even. I remember asking, I remember asking Jude, because I had no idea even about Bitcoin yet. I was asking him, like, hey man, is this a good time to buy Bitcoin? And like all those annoying questions that total noobs ask, like, should I buy Doge? Like, what should I do here? And Jude just giving that look like only Jude could probably do, right? It's like the look of disgust, just get out of here. But here we are, 4 or 5 years later, it's fun.
Yeah, awesome. I think it was around 2017 or so, and a lot of these projects were raising capital, including us. And I think it's also amazing to see, like, especially for layer 1 protocols, like it takes you almost like 2-3+ years to actually build it. So a lot of projects that raised capital in 2017 or early 2018, they're actually coming online now in the past 6 months or 9 months or so. And I think it's kind of really interesting. But yeah, would love to hear your journey. I've actually seen some of your DeFi reviews here and there. Love to see the fact that you jumped in and you're providing the service to the community. But love to hear your story into the crypto rabbit hole.
It's kind of funny to hear you say, like, projects take 3 or 4 years to raise capital and launch, when existing in Ethereum DeFi, people literally are coming up with an idea and deploying a smart contract the next day, and then the day after that, they're hitting like 100 million total value up, and then a week later, they're hitting $1 billion, and then a week after that, they're getting hacked with great, right? And just to watch what Stacks has done with the careful launch, just like initially spending time with you guys and see how conscientious you were, and then to see how you decided to go the sort of legitimate route of launching a company and a token, and as a security and stuff like that. And it's such a different frame of mind from what's going on with Ethereum, and if everybody was doing what you guys are doing and actually coming out and saying, yes, we're a business, and yes, we're a corporation that is doing XYZ, and this is our business, this is how we make money, these are our risks, etc. If everybody was doing that, it would be a whole different situation with Ethereum. But obviously they're not, and that's both good and it's bad, right? So I'm gonna have questions for you guys too about what Stacks is gonna look like and how permissionless it's gonna be. But as far as my background, yeah, I spent about 20 years in growth and marketing roles for tech startups, media, sports, all different fields. And in 2017, I fell down that Bitcoin rabbit hole, as they say. I was like a lifelong libertarian, and that's what drew me to it. And did some consulting in the Bitcoin field. Stayed away from ICOs as much as I could in 2017. And then 2019, sort of figured out DeFi and started to learn about the opportunity that was being presented to provide decentralized financial services for the decentralized cryptocurrency, which is Bitcoin and Ethereum. And up until then, you couldn't do much with Bitcoin that was really truly decentralized. Like the the cryptocurrency is decentralized, but the services we use were mostly centralized. They were exchanges and other trading platforms. The opportunity to build something that would put those guys out of business seemed really interesting to me. So I started to dive in there, and I started a YouTube channel, which brought a lot of people into DeFi, I think, where I sort of gave easy to use tutorials about how to get involved, because it's tricky at first. As you guys know, like just setting up MetaMask was kind of tricky for people if you've never done it before. So that went on for a while. Then early 2020, I learned about the centralized control that was being used behind a lot of these products. And the problem I saw, which I hope we can talk more about, because I think it directly relates to what you're doing and the legitimacy of it. The problem that I saw was that most DeFi projects were presenting themselves in a marketing fashion as being just as decentralized as Bitcoin, right? They weren't coming out and saying that they were any different. So through omission, these projects were basically trying to give the idea that they were completely trustless and that users always had control of their money and things like that. If you had your keys, you had your coins. And that really wasn't true, because they were using these admin keys, these multi-sig smart contracts, to continue to it, which gave, if used maliciously, it gave the core team the ability to take those funds out if they wanted to, and to do whatever they want. Or if they lost the smart contract, the multi-sig key, those funds could be compromised, or if it got stolen or hacked or whatever. So as soon as I saw that, I realized people needed to know. So I started to expose that kind of stuff. And since then, it's really, it hasn't been about, a lot of people think that I'm sort of trying to force projects to change what they do, and I'm really not. My focus has been on transparency. Like, I'm a firm believer you should be able to do whatever the hell you want as a project or as a user, but you should always have the ability to have all the information. So if you want to be a degenerate gambler, you should be able to do that as long as you have the right information. You know you're being a degenerate gambler. If you're being a responsible person and you just want to get this yield that you see, this 500% yield, and you think, oh, it's totally safe because there's nothing on the website that says there's a risk, that's who I'm talking to. I'm talking to those people. I want them to know there are risks. So if you're going to do this, know the risks, know the chances that you're going to lose your money. So that's what DeFi Watch is, and that's what I've been doing for the past year and a half now.
Thanks. Do you find that the risks are mainly around who has admin controls of those sort of master keys that can pull the rug out from unsuspecting holders, or is it something different?
That's part of it. That's part of it for sure. There's other risks, the economic risks that come with just really complex code, the unknowns that come with layers upon layers of smart contracts within one product, sort of the unpredictability that might occur, the manipulation we've seen by whether they're outside actors or inside actors, manipulation of certain protocols to generate a desired result, like using flash loans and stuff like that. That doesn't require centralized control. That just requires somebody who's very intimate with the code and sees this nuance of it that they can exploit. So these are all things that whoever is creating the code, whoever is writing the code, knows, right? And it's not like perhaps they don't know about this nuance that they missed, or that there might be, this particular thing that somebody could take advantage of. It would be very irresponsible for them to launch a project, that's the problem. But they do know that their code is complex, and they know that there's a chance it could be manipulated and maybe with a flash loan or some other way. And that's the kind of stuff that's not revealed. So, I'm out there trying to just make sure, hey, if you use this project, you gotta know it's very complex. You might lose money if somebody manipulates it with a flash loan or something like that. So the risks are really around that, around decentralized control, which is really a big area of focus right now with multi-sig control over not just smart contracts, but entire blockchains like Polygon. And those are the two main areas of sort of focus for me. And now a new one that's bubbling up is around decentralized governance and the centralization of power and the theater that goes into those systems where the tokens are so heavily concentrated with the founding team and with the early investors that it sort of almost needs the entire rest of the community when that basically 5 or 7 parties that were early investors in the project could come together and pass any proposal that they want. So it's that kind of theater that I'm trying to expose to, because I know, again, you got it. The whole point of this is transparency. Like, there's no other reason to be doing this than when I'm being transparent. And when I see projects not being transparent, I just feel the need to reveal what I see. So that's what I'm doing.
That's super interesting, and I think about the fact that you were talking about that, it's so easy for people to launch like new smart contracts and raise like hundreds of millions of dollars in it. I definitely see that, and I think I see a lot of that happening, but it also gives me pause as well, like in the sense that it's amazing that so much experimentation is happening and so quickly people can do all these things, but part of me wishes that there are either better tooling available. So we've done a ton of work on more secure programming languages, for example, that just make it a little bit harder for developers to hurt themselves. Or we come up with a set of kind of like shared values or frameworks where people can effectively launch these things in a more responsible way. I think L1 blockchains are different because they're just from a purely engineering perspective, it just takes so much time. When I was talking about, late 2017 or 2018, if you look at the projects, I think Filecoin raised a couple of months before Stacks. And then I think Definity was a couple of months after us. But the mainnet launches are all happening in the last 6 months or so. And that's just hardcore engineering, right? It just takes a while for building this public infrastructure and launching these L1s. But once the L1s are there, I think it's relatively easier. I'm not trying to downplay that, from an engineering perspective, it's not a hard thing to launch a protocol on top, but relatively speaking, like, you're not building the public infrastructure, the infrastructure is there, and now you're just building on top. And I think when you're talking about that, obviously the type of stuff that you look into in terms of, is the project being transparent? Like, are they actually pretending, or in marketing speak, decentralized, but actually they're not? Or what's the distribution of the asset? I mean, all of that is important, but I've been kind of like more interested in what type of tooling are we giving these developers? Like, can we actually, because a delta shift in the underlying tooling can actually make the life for everybody on top much easier. I'll give an example, right? So we have Philip in the audience right now from Hiro. They're launching a pretty interesting stable coin where the collateral can actually earn a Bitcoin yield. Like, I personally just being kind of like more in the Bitcoin camp, I find that super interesting that you can earn Bitcoin yield on your collateral, and that's like one of the features that they have. But they can actually benefit from more secure programming languages and maybe a bunch of things that are actually a problem in DeFi currently, like an entire class of errors or bugs that maybe are left there intentionally by a malicious actor. They are just entirely not possible. Like, you can't even have them. I think that thing really interests me. And then on I don't want to call it regulation because we know that regulators are slow and obviously none of us wants like heavy regulation in this space, but almost like self-selected kind of like opt-in transparency, right? Like where there's a set of like frameworks that generally healthy practices for projects that they just kind of like participate in that. Like, I'm not talking about the kind of SEC qualified offerings that we did, sort of like pages and pages of effectively disclosures and information. I think that's a lot of overhead for entrepreneurs, especially like small teams. But I would love to hear like your views on these type of efforts around either these frameworks or some sort of common point that can actually help developers at large.
Yeah, that's interesting to hear. And I was looking through, I've been checking out stacks and looking at clarity. I'm not a developer, as you know. I this from the point of view of a layperson who's somewhat technically literate, but not a developer, right? So I can look at this stuff and sort of get a broad overview of what we're trying to do. And I think as a preface, a big part of this, as everybody probably knows by now, is that a lot of the problems that are happening in the Solidity world, Ethereum and all the other chains, are not being done by responsible people. Okay, so they have a lot of shortcuts being taken, and a lot of the problems that we're seeing are as the result of literally people copying and pasting code, just changing a few labels or a few names in the code. And they're like me, they're not developers, like they're just, and when you look at what's happening, like Binance Smart Chain has gotten a reputation lately for being a home for a lot of exploits and stuff like that. And the main reason for that, I believe, is that there's such a low barrier to entry because of the costs and because of the compatibility with Ethereum. So you could basically just take any Ethereum smart contract, copy it, paste it over to Binance, deploy it for like 90% less of the cost than it would be on Ethereum. And like then all of a sudden you got all these apes who just monitor for anything new that they could throw their money into. And they hope that 1 out of 10 or 20 of those actually pays off. And those things will grow to hundreds of millions of dollars because they're leveraging and borrowing and doing all this other crazy stuff, right? So the developer is not responsible. The user is not responsible. There's no responsible party in this thing. None of them. They're all just complete degenerate people who just want to try to make a quick buck. So when you're talking about clarity, and you're talking about responsible tooling and in a new ecosystem that's going to require learning programming language and stuff like that, you're talking about a whole different class of developer. You're talking about a whole different class of user. And I personally love it. I love the sound of that because I think that barrier to entry could create a more responsible and reputable ecosystem in that regard. Because like I said, that low barrier to entry we're seeing right now with side chains and stuff is creating a lot of the bad reputation and is bringing these we call them degenerates into the space. There's still a lot of people in DeFi that want a responsible ecosystem like we used to have. Like we basically had until maybe I guess less than a year ago when all this stuff kind of started spiraling up. Where we had all these layers and layers of smart contracts and all these huge compounding yields and stuff like that. Before that, an Aave compound maker, and we had a responsible ecosystem with much lower yield, but a lot less problems. And I would love to see how Stacks does with this. I think it's definitely a smart move, especially considering the amount of thoughtfulness you guys have put into the company so far, and into the token launch and stuff like that. It all seems to make sense to me.
Yeah, this is Philip speaking. I'm one of the people who are building Artidico, and I do have quite some experience by now. I think about 5 months using Clarity. I think Muneeb can go a bit deeper on this, on how Clarity is, let's say, a more secure paradigm in comparison to some features that Solidity has, or features, bugs, whatever you call it, right? Like re-entrancy and things like that. Clarity protects the developer, let's call it, from that by default. The only, well, let's play the devil's advocate here for a second. The only thing that I would say, not really against Clarity, but that maybe speaks a bit more for Solidity, at least for the time being, is there's tons of shops that do security audits on smart contracts and things like that. That's one thing that I think we need to see more for Clarity as well. You know, if I'm launching a protocol, how do I, as a developer, know it's secure? Maybe 10 people have looked at my source code. How do I feel comfortable that I can launch it and accept people's money and then increase that total value log from, say, $1 million after a week to 100 million to $1 billion that you were alluding to earlier, Chris? So I do think maturity is one thing, obviously. But to the case of Solidity, they do have that going for them. Having said that, if you look at Binance Smart Chain, yes, there's a ton of protocols. So, but what does the layman user, you know, what can they do about that? If I'm a non-coder, let's say not a technical person, how do I know what is secure to invest in and what is not? The most I can do is look at a security audit or whatever, you know, especially on new launches, or I can just wait till after 6 months and hope that it won't get hacked beyond that. We had this case just 2 days ago with Titan, I think it's called. You've probably seen Mark Cuban, he's all over the news. How even he gets, you know, not rug pulled, it wasn't a rug pull, but they're also a stable coin, even those things go wrong. So I'm not sure how, as a whole, as an ecosystem, whether that's on Ethereum, Binance, or Stacks, how can we protect ourselves better? That's still an open question for me, really, that hasn't been answered.
Yeah, I think as far as audits go, you know, or people like me who are not developers definitely relied a lot more on security audits a year or two ago than we do today. And today we know that a lot, if not most of the projects that are getting exploited on Ethereum and other chains have been audited. And they have bragged about their audits and posted their audits. They were audited, found errors, and they fixed errors, and you know, auditor confirmed they fixed the errors, and they launched, right? And then next thing you know, 3 months later, 6 months later, either a bug is found by a hacker, or an exploit occurs that was outside the scope of the audit. So I definitely now at this point think that battle testing is just by magnitude better way to develop trust in the user. You know, and it's less about time. I don't think it's as much about time as it is about the value and the size of the honey pot. And personally, I don't really engage with anything until it gets past, you know, for at least a little while, it gets past 100 million at this point, because 100 million used to be a lot. I remember when all of DeFi was a lot less than that, but now it's like one project, it's 100 million, and all of a sudden that's, you know, hackers all over. Everybody's looking for a way to get in there to manipulate it, to the flash loan against it, and stuff like that. So if they're not able to do that at that point, then I'll start to consider, even if there's been audits, even if there's been multiple audits, like I don't really care because I know auditors do stuff every single day. And audits are great for developers, right? The things that they miss in their code, but for users, it doesn't really give the guarantee that battle testing will do. So I hear what you're saying, but you know, from a developer point of view, I think it matters that a lot of auditors don't speak clarity yet. But from a user perspective, I don't really care that much because I'm going to wait for it to be battle tested anyway. And anybody who gets in before it's battle tested, I tell people all the time, you're gambling, you're a beta tester, you're an alpha tester. You know, you are, there's a great chance you're going to lose your money. Even if there's an audit, don't think that you're anything more than an alpha tester and invest accordingly. That's the way I approach these things?
Yeah, I think audits are an interesting topic, right? So obviously, in general, they're a very healthy thing, and you should definitely have a bunch of experts whose job it is to do code audits, and they build their reputation that way. But my kind of like goal has been almost like audits are also very much like a manual process. Like it's a human sitting there looking at the code. And how can we basically reduce the need for audits as much as possible? And that's where we went for a decidable programming language, right? So for people, you can visualize this as like if you imagine like a big circle, and Turing complete languages are in that big circle, meaning that you can just basically write anything that you want, anything is possible. So you can imagine almost like a slightly smaller subset, and that slightly smaller subset is a decidable language. There are certain kind of like edge cases or corner things that you cannot do in a decidable language. It doesn't mean you can't write your program. It just means that you need to write whatever you want to do in a slightly different way because the language restricts certain key functionality. But the benefit that you get is that now your code is very precise, and even before running, you can actually do formal verification. So obviously, actually doing the formal verification requires more tooling, and some of that is like in the pipeline, and we'll get there like maybe stacks 2.1 or so. But the general model is that even before you run the code, you actually know precisely what the program can and cannot do. It's a little bit like the type of code that runs on airplane. But you can't take the risk that there's going to be a bug in the code mid-flight. That just feels like a very scary thing. So they have like proof checkers and formal verification on the code before they deploy it. And decentralized finance to me feels closer to like a airplane mid-flight than a website that can just crash and nothing bad will happen. So obviously audits would still have their place, but these types of automated tooling can actually go a long way to help the developers. And we've also done some other really interesting things as well, where we actually don't use a compiler in Clarity, and the exact code is published at the blockchain there. So if you go to the Explorer, explorer.stack.co, and some of the I think the PUX contract is the one that has the most amount of capital locked right now, around $400 million. And you can actually literally see the code of the smart contract right there. And there's no compiler, meaning that the exact code is the thing that is running, not that there's a step in the middle where you compile something else and now you actually A, don't even know what this compiled code is. B, there could be bugs or unintentional things introduced by the compiler itself. And people would be surprised to know that even with much mature systems and programming languages that have been around for decades, there are compiler bugs that get discovered all the time. And again, when you're talking about hundreds of millions or billions of dollars of money being kept on these programs, you just don't want to take that risk.
Yep. In addition to that,
So
I just want.
are you?
Sorry, go ahead, Chris.
Okay, I'll go first. Are you saying, Muneeb, that with Clarity, it sounds like it's a little less open-ended, that solidity is what you're talking about, which sounds like there would be less incentive for get-rich-quick schemes to try to use stacks of a higher barrier to entry, and just more friction for them coming in because there's less flexibility with the code, which again wouldn't be conducive, it sounds like, to a get-rich-quick scammer as opposed to a legitimate DeFi product, something like a Compound or something like that actually is interested in working in a regulated scenario and complying with that kind of stuff, and having a predictable and transparent product. Is that like a safe assumption or a safe thing to say?
I think there are two parts to it, right? So one part I would agree with that in general, if there's there's a sophisticated team of engineers, and they want to do the right thing, and they're looking for the right tooling, and they discover it. I think they would appreciate clarity, and they would appreciate almost like not just clarity, right? It's also the underlying blockchain. Like for example, there's a lot of criticism out there for Binance Smart Chain that hey, it's basically just a couple of nodes and it's a federated system, and you're just running things over there. Whereas the same thing with this constant ongoing comparison between Bitcoin and Ethereum. Bitcoin has done certain things where the base layer is more simple, more secure, more decentralized, and so on. Right? So there someone who digs in deep and looks at different attack vectors, different types of design choices made, they can see the sophistication there. But I almost feel like the type of bad actors that you're talking about, they basically go wherever the money is, right? So in some cases, these activities happening more in Ethereum, yes, there's some overlap with the tooling, but I think it's mostly happening because of the success that it's been. Like because there is a lot of developer activity and a lot of money moving around, it attracts all sorts of people. And then I think if the tooling and the culture is a little bit kind of like, it makes it a little bit easy to do that. Like, for example, I've seen this stuff in the Ethereum developer circle where people are like, hey, I tested production. Like that is something that, would scare me personally, right? Like I wouldn't be able to sleep at night if any of the engineers I'm working with is actually just literally testing production. I think there are people there who literally testing production. So I think it's a combination of culture, but I would say that bad actors are going to go wherever the money is, and I think it's a little bit of a byproduct of the success of Ethereum that a lot of these types of people are kind of going there and trying to make the most of the opportunities.
Yeah, speaking about transparency and things like that. For Artidico, and I'm speaking just for ourselves, for our project, we have built in the open from day one. And speaking about testing and production, we specifically have decided not to do that. We're not going to deploy to mainnet until we are comfortable that we would put all of our own money in it. And the way we approach it, and I think that this should also signal to the Stacks community and the further community beyond that, let's say, we have built in the open from day one. We have done multiple deployments to testnet. Right now we're live on reg test. Everyone can use our product. Everyone can audit our code. Everyone can ask me questions. Same with the team. We're available 24/7 almost. And I hope that, adds some trust to it, specifically because we're here, not to scam you, but to build a valuable product and do that in specific steps where people know, okay, this has been tested for 2 months on testnet. I'm not saying this, will eliminate all bugs, but it should at least add some factor of trust and confidence, and that's what we're going for. I'm not going to deploy my code from day one on mainnet. It's just too tricky.
It's interesting listening to the conversation because some of it does sound like early Ethereum DeFi, where it was a pretty responsible set of actors, that were coming to the table, that wanted to create products, and that were testing on testnet, and that were doing things the right way. But once the ecosystem grew, and like Muneeb says, the people that chase the money show up, I try to think ahead to that. And I think, part of the reason people have been testing in production is because the products that they're developing utilize 5 or 10 other existing smart contract ecosystems. These other products, like Yearn, for instance, one vault could use 5 or 10 different third-party smart contracts that are outside of Yearn, and there's no way for them to know if this strategy is actually going to work until there's significant money in it. So, and I don't think it's a good thing, but I do understand why sometimes they feel like they do have to test in production, so to speak, in order to make sure. And when they say test in production, it's like basically make sure, see if anybody's going to attack it, right? It's like see if anybody's going to be able to crack the code, and so I think it's less about bugs and stuff like that, because we're getting audits, they're figuring that out, but it's more about the attack surface. I'm curious if you guys think that as Saks grows, and obviously I assume in a permissionless way. Actually, that's a question I actually don't know the answer to, how permissionless it's going to be and who's going to be able to deploy on it. But do you see this as being a thing down the road that you're going to have to contend with, and how is that going to how is that going to work out with the way that you built the company and the way that you've sort of already settled yourself into regulatory compliance and stuff like that?
Yeah, let me first answer the security regulations question, because I think there is a little bit of a misunderstanding out there in the market, because we effectively think of this way: every project raises capital. If you're doing it privately from investors, it's like a Reg D offering. If you're doing a public offering but you ban US investors, it's a Reg S offering. But if you open up to US investors, then that was a Reg A offering, or if it's smaller, there's something else. But effectively, we did that, and given that the project started in the US and a lot of our developer community and our community were in the US, we just felt the responsibility that we can't leave out the early community members from the offering itself. And we just went basically, basically went to the regulators, fully SEC qualified offering, and then it was open to the US public as well. And as a byproduct of that, you get all the disclosures of transparency, and it feels like an IPO, right? But it's for a crypto asset. But there's nothing in the asset itself that makes it a security. It's effectively Stacks as gas for smart contracts. Think of that as a L1 that connects to Bitcoin and basically brings smart contracts to Bitcoin. And Bitcoin is the reserve currency and the store of value. And Stacks is gas for contracts. So it's a separation of the layers, right? So what you're seeing in Ethereum these days, that there are conversations there, or ETH has money, right? Or ETH has quote unquote ultrasound money. And at the same time, ETH is gas for smart contracts. I think these two things, in my mind at least, have different properties. Like one needs to be stable, immutable. No one can change that. No one can change the monetary policy, and it basically needs to be durable. And the other can be more experimental. It's gas for smart contracts, and smart contracts evolve and so on. So we basically keep those two layers separate. One is Bitcoin, one is Stacks. So when we are launching the Stacks blockchain, we explicitly decentralize the project, and again came up with the legal frameworks for that. Here's the legal framework through which any single company is not responsible for launch or operations or development of small project, right? So I would just say that there is a market misconception that Stacks might still be a security. It's clearly not. If anything, we're the only project that went through it, the full compliance process. Projects can get SEC enforcements down the road as well because of what they've done. We've seen Ripple, we've seen Kick, we've seen Telegram, and so on. And the SEC usually moves very slowly. So if anything, again, we were being extremely careful just to cover our backs. That the offering that we did was basically SEC qualified. And then when we said that this thing is decentralized, we really meant it. And there was a full legal framework behind how decentralization happened and how there's no single company that you can point to and say that this company is responsible for the development of the project. That makes sense.
And that's an interesting thing to hear you describe, because I definitely think that there's been in DeFi especially a huge amount of theatrics that has gone into a lot of the planning for a lot of different products that already exist. And the purpose, from what I can surmise, of the theatrics is to sort of obfuscate the centralization, or to obfuscate the man behind the curtain that somebody might be able to point to if something goes wrong, and so you guys took a completely opposite take. You were like, we're just going to take this head on. We're going to tackle this up front. We're going to go out there and do this the right way in the eyes of regulators in case they do. And, it's interesting too, because a lot of the points that I've raised with Polygon and some other actors in space who I feel like are obfuscating the truth about how to operate. A lot of that has been around the fact that I think regulation is inevitable. I think it's silly for any of these projects out there to think that they can fool regulators or that they can get around stuff because they've tokenized their governance. When there's still this startup corporation that's right there, and hey, we're a startup, we're sitting here, we're incorporated in the United States, but we decentralized our government. So, you can't make us do anything. Oh, but if you really push us hard enough, we could get 700 people in a room to use their tokens to vote this change into the smart contract. Oh yeah, we can convince the token holder community because basically if we don't make this change, the value of the token is going to zero, right? So yeah, we could sell that. We can make that happen. And that's really, it's becoming a common theme. So to see you guys go about it a different way, which is not been common, and when you talk about DeFi at least, is good. It's refreshing. It's like it's going to be a great experiment. The question I have is, how confident are you that once exploits do start to occur, which it sounds like they will, right? Because like you said, bad actors will flock as soon as you get some serious money. Do you feel like it could be more of a pain in the neck than a good thing that you've already sort of put yourself out there as the sponsor of this thing, even though it's decentralized and there's nodes and tokenized governance and stuff like that? I'm assuming you don't, but I'm just curious if you think it could come back.
Yeah, so I think the main thing to understand there is, let me give some examples. So, for example, the SEC came out and took the position, like without really saying that, Ethereum was a illegal securities offering. It basically said Ethereum is decentralized enough that it is no longer a security. And the way to think about that is that effectively the SEC grandfathered Ethereum, right? That we are not going to go after the folks who launched it, that we did a legal security offering. We're just going to grandfather. And then 2017 really was a story here. Not only there's some interesting things happened and interesting projects that were started, but there was actually the DAO report, right, which I don't think a lot of people read, because what that report said was the SEC considered the DAO to be a security, and they wrote this huge memo telling the industry that these things are securities, there are the reasons why they're securities. But interestingly, for some reason, they decided to take no action against the people behind the DAO. And because they did, nobody actually knows about the DAO. If they did, I think it would have been common knowledge that these things are securities, you have to be extremely careful, yada, yada, yada. And after that, I think the SEC started taking action. It's basically like they're slowly ramping up this awareness of what they're doing. With Ethereum, they said, we need some grandfather. For the DAO, they said, it's a security, but we decided to not take any action. And I think we should be treated action. But that's like a slap on the wrist. It's no amount of money for the US, right? And the next one, like Telegram and Kick, they basically beat them in court, and Telegram actually got shut down. And now we're going through the really big case, which I think is going to be a deciding factor, which is the Ripple case. That's in the court. Ripple has all the money in the world trying to fight it off. But I think the court decision on that case is actually going to and then they find a lot of what happens from a regulation. Whenever from the SEC side, it's literally ramping up the heat, so to speak. From a slap on the wrist type of a fine, you're going to completely shut down your project. People are the project is fighting you. You're going to court and you're going to have to take a very interestingly, this has nothing to do with how these like basically think of that as there are different ways that you can launch your project, and there are different levels of decentralization you could be sitting at. What we did was simply saying that until we are decentralized enough, we are just going to go ahead and explicitly comply with the regulations, which from a legal perspective is the right thing to do. Because even if you think it's a gray area, like it's unclear if it's decentralized enough or not, we're just going to comply anyway, right? So that when the regulators come and they basically try to say, oh, you did something wrong, we'll be like, no, even if this thing was not a security, we were treating it as if it was a security just to be careful, right? So in the gray area, we treated it as if it's a security, whereas I think by default, when people are in the gray area, they treat as if it's not a security, right? I think that's the core difference. And only when we felt comfortable enough that there is no way that anyone can say that this is a security, we stopped treating it as a security. And this happened in January of this year. Does that framework make sense?
Yeah, and it's really interesting because, again, like with a lot of DeFi projects, my take on a lot of them has been that it's almost like a race, to decentralize before eyeballs are on them. But what you're saying is you're taking a much more methodical approach. And I'm wondering if that is based on conversations you've had with regulators or with people in the know? And is this a framework that is going to work? Or is this something that you're just you guys are hoping for the best because you haven't gotten the guidance and you're like, maybe this is the best way to do it? Because I'm also thinking about like the Delta type situation where it was decided that, hey, if we launch a product and it becomes decentralized but then people use it later, even after it's decentralized in a way that breaks the law, you're a responsible actor, right? And I don't know if it might be apples and oranges, maybe you know better than me, but I'm just wondering how you came to this sort of method, have this approach.
Yeah, I think it's basically usually like we go by first principle, like that. Okay, let's look at what all the information there is, what are the different paths available, and can we almost like do the hard work up front so that our lives are a little bit easier down the road. I think that's basically where it comes to, because we could have decided to take more risk, and that would be a perfectly justifiable path. That we are just deciding to take more risk because we don't think that enforcements are going to be that problematic down the road. We just decided to not take that risk and take more conservative approach. But as far as regulators are concerned, like I think the SEC qualification itself speaks for the work that we've done. I think we're the first cryptocurrency ever that was able to get a SEC qualification for the offering, and that is the explicit like the SEC qualified the offering, meaning that they were fine with our offering. In terms of decentralization, there's no precedent for that, right? But interestingly, I'm not allowed to disclose that have we not had any discussions with the regulators about it. They just have restrictions around it. So I can't say that I have, or I can't say that I haven't. What I can tell you is some of the ideas that basically went into our decentralization framework that already found their way into proposals coming out by Hester Pierce, for example, in safe harbors. Like she's trying to propose safe harbors. And if you look at the safe harbor framework where they're talking about let's say you have a safe harbor for 3 years where you don't have to comply with security regulations because you're a startup and you just go out and do whatever you want, but you still need to come out of security regulations at some point. So if you look at their framework for how they're proposing, how you can come out of the security framework, it's basically the framework that we did.
On the one hand, it's great if you've been able to sort of crack the code and also give guidance to the people who are going to be giving the guidance about the right way to develop this kind of product. On the other hand, this type of, like, if this gets formalized, it would basically eliminate the opportunity for independent developers to really do anything. I mean, I'm sure this costs you a ton of money. Like, it was not cheap for you to do what you did with the token launch and stuff like that. You had to hire lawyers, you had to work on the coin list, and you had to do all this stuff that, a team of 1 or 2 people that are just developing some code or want to launch something that could be considered a security in some way, it would be prohibitive for them, right? So they'd probably be driven into anonymity or something like that and launch it on BSC or something. But are you gonna? Yeah, go ahead.
Oh, I was just gonna say maybe a better question to ask Muneeb is if you were to launch a new project that had a token with a community today, would you do it any different?
I think there's definitely a lot more information available now compared to when we launched things, right? So our qualified offering was in 2019. I think there has been a lot more information. There have been a lot more enforcements. There have been a lot more court cases, also frameworks that weren't as clear before. And let me very quickly answer Chris's question as well. That I think the best outcome in my mind is that something like either a safe harbor or a very simple framework gets widely adopted, meaning that it's very low overhead for any project to start like basically launch a crypto asset without fear that they're doing something wrong, because they're either in a safe harbor or we have cracked the code on some sort of a framework that launch things this way, and if you launch things this way, you're largely fine. But eventually, I think the question of like, how do you come out of a safe harbor, or how do you decentralize your project enough, is something that every project would have to look into. And I think that's an important point, because that's not just for regulations. Decentralization is actually healthy for the type of things that we're trying to build there, right? And part of the work that Chris, that you've been doing when you're exposing kind of like points of centralization that are kind of like hidden behind, I think it is directly relevant here, because if the framework has explicit definitions of decentralization, like they could be around token holdings, like what % of supply you have, or what type of control people have on the network, and so on. It could be a long list, but I think that's a very healthy thing for building a truly decentralized protocol, because you can set almost like a base level of decentralization. And if you don't have this amount of decentralization, then you could be in a gray area from a regulations perspective. But now coming to Patrick's question, I think interestingly, lessons for young entrepreneurs would be that it's a lot easier to raise private capital. Like our kind of like our decision to do a public offering that is open to US people, like it's in some ways like that was very much driven by, we want to take care of our community, right? Like it's not fair to our community that they cannot participate. But from a regulations perspective, that's actually a very, very tricky thing, right? Like there's a lot of overhead in trying to do a public offering in the US, and that's just a fact. So if you're raising capital, and if you're just raising capital from sophisticated people privately, that's usually much easier. Right? That's one thing. The second thing is that if you, we were also developing a L1 blockchain, which by definition is a multi-year R&D type of a project, and you have to hire a team, you have to hire computer scientists, you have to build this thing out over multiple years, and you need more capital. But if you're a team of like 2-3 people who's using this public infrastructure that's already there, and I think there are enough L1s now that you could pick whichever one you're drawn to based on whatever kind of characteristics appeal to you, and then you're just building there, you likely don't need that much capital to build over multiple years, right? So your engineering cycles should be much smaller, your team sizes would be much smaller. So you can consider launches that are basically mining only or something like that. Like imagine how Bitcoin launched, where there's no offering whatsoever. Maybe you raise a little bit of a private capital for your company, and then your launch is like mostly mining. I'm not saying that if you do that, you're completely in the clear. I'm not a lawyer, but what I can tell you is that it simplifies a lot of things. It simplifies things a ton, especially if you haven't taken public money, and especially if you haven't taken public money from US people.
Yeah, that's how city coins are launching. They're just starting with mining, no pre-mine, no ICO. I gotta hop off in a minute. Just wanted to give a heads up. This has been a really great conversation.
Yeah, I believe Chris also had a hard stop, and I just want to be mindful of your time, Chris.
My hard stop actually went away, so it's up to you guys. I did have a couple of questions for you if you guys have more time. All right.
Yep, I'm gonna jump on a call as well, but happy to take a question, Chris. And we can always. I feel like we need to catch up more in general.
I can pop them off fast. I mean, what I wanted to know was, are there any ongoing points of trust that users have to have in your team to use stacks now or in the future? And are there any points of centralization or trust that you plan to eliminate once you get to that point of decentralization where you feel like you're ready to sort of unleash the beast? And directly asking that really in comparison to Polygon, who runs a huge network, has a company that has a multi-sig that secures the staking contract and bridge contract, and it's a 5 of 8 multi-sig that they have no plans of eliminating anytime soon. And I'm wondering if stacks could be at risk of running into the same kind of problem. And I don't know if you have time to answer that now or later.
No, I can jump into it. Right. So this was something that we took very seriously, and basically the way the network launched was my company, and we also almost like changed the name of the company so that people don't confuse it with the project. It's called Hiro. We build developer tools in the Stacks ecosystem, and we effectively just worked on the code, and then it was up to independent miners that do they even want to launch this network or not. And we are not even a miner. Like we don't mine, we don't do anything on the network, we don't operate it. Like we went to the other extreme. Like we don't even have a single miner that we run on the network. And there was a threshold of miners, independent miners that came around, and our mining is also permissionless. Anyone can become a miner on the network. You basically just need to have Bitcoin. And the way our consensus works is that it's a consensus between the L1 stacks and L1 Bitcoin, and you're basically mining using Bitcoin on the Bitcoin side. So anyone who has Bitcoin and can run a node can become a miner. So it was launched completely by independent miners. It is run by independent miners. We effectively have no control, and it's also not a proof of stake system. So people who are holding of stacks assets, they can be helpful in consensus. Like they can send certain hints that helps miners, but they really don't have that much control. It's not a proof of stake system where they have stake and that's how they're running the nodes. And even though it's not a proof of stake system, we still made sure that there aren't a lot of kind of like concentration of the token. Right? So we distributed like some of the treasury that our company was sitting on. It's not public yet, but basically a bunch of top research universities around the world, including the US. We're setting up Bitcoin and crypto research centers there. We donated the treasury out. We also formed like independent companies in the ecosystem. Some of our team members that basically went off, and these companies are completely independent, meaning that they don't share any managers, they don't share any officers, they don't share any board members, and they are free to do whatever they want to do. So there isn't even a concentration of the stacks holdings, so to speak, like it got distributed out to a bunch of different parties and independent universities and so on. And then there's a long list of the things that we did. But I actually feel very confident that on decentralization scale, Stacks is actually really high up there when it launched in January.
Does the same level of trustlessness apply? Because you're going to have a Bitcoin bridge, right, or a Bitcoin vault of some sort. I'm assuming you're going to be doing that to get Bitcoin into the network. So is the same level of trust that's going to apply to that system?
Yeah, it's a great question. So there's basically a mechanism where logic in stacks clarity contracts can direct Bitcoin payments. And more than 500 Bitcoin have already been transferred on the Bitcoin main chain using it's called QX, the way the consensus algorithm works. But then there are other ways of bringing Bitcoin to the stack chain, including like custodial services, like I think TokenSoft announced one, or federated systems, right? Like where there's a federation that signs the Bitcoin is coming in and out, or fully trustless systems where you're not trusting anybody and Bitcoin can flow in and out of the stacks side. And the current POX mechanism that already is live falls in the trustless system, where there is effectively, logic on the clarity side is triggering Bitcoin to move on the Bitcoins, and that's how people are earning Bitcoin. The Bitcoin that people earn right now through the POX contract, it's real Bitcoin, meaning on the main chain. It's not a wrapped asset. It's not something else. And in terms of moving Bitcoin between the two chains, like all three options are possible: custodial, federated, or fully trustless, and they're all in different kind of like stages of development.
Gotcha. Cool. I look forward to looking at that more. I did something similar with RSK, found a few things I was concerned about, so it'll be interesting to see how you guys did it differently.
All right, awesome. Well, great chatting. Thanks everyone for listening.